Hello and welcome to the weekly Inner Circle update. So we just go through all the markets and see what's been happening and see what our game plan is for next week. Actually quite a lot happened last week, and so there is going to be some action and some positions taken, I think, by some people. Starting off with commodities, unusual, don't normally start with them, but sugar. It's been forming a base. As you can see here, it's been going sideways really since June, and support is at the bottom there, so we've got the weekly black line and the blue monthly line, and we've been waiting for a bit of a breakout, and that's what we got on Friday. So there's a power play buy signal. It's got some hurdles, 15, 17, but that's 100 points, that's 50, 60 points away. What we've been waiting for is it to break out intraday, and our key resistance was 14.45, which we took out on the close, so we will be getting involved in sugar. Next one is crude, which has been in a yearly bullish setup, and finally it's a bit late in the year, it's been a long time coming, but we've finally broken up. So we took out the weekly resistance at 53.09, which opens up the upside. First target is 59.35. So we're interested in oil, and we're interested in all things related oil. So we'll be looking at some oil stocks and see which ones are the best opportunities there. Next is gold. Held that weekly support point, that big black line there, on Friday, and produced a pops buy signal. The dollar isn't really playing ball here. If we're going to look at the dollar, and that's also bullish, which obviously is not necessarily good for gold priced in dollars. So for people who really wanted to get involved, it might be ones that are based in euros or based on the pound or something like that. So, but certainly no reason to be short until that weekly level is taken out on a daily closing basis. Have a quick look at silver as well. Not as interesting. It failed at the weekly resistance point a couple of weeks ago. You can see we had a time continuation UFO, and the diamonds are a step process ending, but nowhere near as interesting. We've also been looking at wheat. Was a position taken early on in the week. You can see that blue arrow, and also we've got that blue square, which is a range relativity extreme, but it doesn't want to play ball yet, and you can see that a couple of days later there was another sell signal. So effectively we scratched that position. If this monthly level can hold, so this is really critical, 422.4, it's got to avoid trading at that price. If it does, that blue line is going to move back up here, and so what is currently support will shift back to resistance. So coming into the end of the month, very important for wheat. Other grain markets not so interesting. Got soybeans. This power play buy was based on USDA, really the wrong time of year for beans to be getting too interesting, and not surprisingly it's drifted all the way back. Corn is also similarly boring. Moving on to indexes. We've had a range relativity extreme, so a few warning signs came out. I did speak about the Dow producing its first negative since early summer, but still no real reason to be thinking about getting short, especially when you look at the Nasdaq, which just powered ahead on Friday. Good results from Amazon and Google, getting the whole thing going again. We've got Facebook and Apple this week, so then we'll see. Most of all the major stocks would have announced their results by then, but currently don't stand in front of the truck. The Dow, see those negatives appeared, but not really much range, and most levels are all still below. Move on to the actually no, we'll do the DAX. Let's just do Europe. Euro down, DAX up. It's a general correlation. and the DAX really took a bid the day before on Thursday on the ECB, so we had a power play buy with a time continuation divergence as a continuation. You don't stand in the way of that, so it held that monthly blue level as well, so it looks like another leg higher. For the Euro stocks, obviously has a broader range of stocks. Also had a similar signal on Thursday. Support is all still below, so again, absolutely no reason to stand in the way. If we do the FTSE, FTSE is a bit more boring. We've got a range relativity extreme. We're just hovering around this final monthly resistance, so not really much going on there. Talked about Australia the week before, had a very long sideways pattern. We broke out, which we flagged 2 weeks ago. Said, right, the longer you've been going sideways, the more energy there is for the breakout. And so again, bullish. No reason to stand in the way of it. Go to currencies. Dollar index, again, broke out on Thursday, so took out the weekly level, and now we have space to rally, so 98.05, so a long way away. This was connected to the euro, which the key support was 116.17 if my memory serves me correctly. Yes, and had a slam dunk signal, and we took out that price on the close on Friday. So futures has a long way before there's any support, and it's the same for the euro. So we've got the dollar index breaking up, euro dollar breaking down. If we look at the pound, pound is just all things Brexit, so very choppy. So we've had signals 2 days running, not really getting involved at all in that one. We are more interested in have a position in the Aussie dollar, which is short. You can see the sell signals, triple sell signal. On that day, we took out the monthly support, and we've carried on down to a certain extent. The stop's been lowered to 77.30. Kiwi, which was another one that had a short signal, and price collapsed, and it hit its monthly target pretty quick. So there was the negative one there, collapsed down. Did actually close below the monthly, but then it's reversed and given us a time continuation signal. So that trade is over. What it makes it more interesting is really actually on the cross rates. I did a big piece on euro cross rates midweek, and euro Kiwi would be the most interesting one. So the Kiwi is at support and it's held. The euro's broken through resistance. And so Euro Kiwi is probably the best cross to play in terms of negativity there. You also have Euro Yen has also broken out as well, although not as powerfully. If you just do dollar yen, it doesn't really want to come up, so I'll do the futures. Do the futures, which is inverse, a minor positive signal. It was the inverse on the spot, but not at support, so not a huge amount going on there. Finally, bonds, which have been under pressure. Draghi turned around and said he's going to do whatever he can to keep interest rates low and pump money in forever. The US market didn't really want to know on Thursday, but has produced a positive on Friday. So this is the T-bonds. The bigger picture is still down, so it just looks like it's a counter trend rally. 10-year notes did the same thing. And if we were to look at Europe, took a little bit of time on Thursday, but then on Friday did accelerate higher, and we've gone above that weekly resistance, and we've had all those blue arrows below. It actually shows up a lot more on the peripheral bond markets in Europe. So Thursday was a buy on the French bond market, and we've carried on through. And the one that it really benefited, because they're in the most trouble at the moment, is the BTP market, which is the Italian bond. Took out the weekly final resistance on Thursday, didn't do so much on Friday. So that's it for this week. No new stock positions, even though we had earnings season. Wasn't really anything that grabbed me particularly. Still looking at the games sector for that one to fall over. Okay, thanks very much.